Hello everyone, it's Michael here from the Trading Institutional Order Flow thread on Forex Factory. It's the 23rd of January. I thought I'd put out a new video today. Thank you to all of you who've been conversing on the thread and sharing your ideas. I really appreciate your candor towards each other. So I wanted to join the conversation um, on the thread, and we'll start with T4I, your AUD USD analysis, and I wanted to go through that. So drawing your levels, I think obviously you understand the concepts, and thank you for sharing your charts. What I would say is, I mean, well, let's go to my charts and I'll show you what I mean. Here, this level has been used, and you have another level here that prices are, or we're eating through as you drew the chart, and it was a poor level. So let's go to the AUD USD on my charts. Let's take a look at what we see. And that time frame was the daily chart. It might be a little longer the video today, guys, because I just wanted to talk you through some of my thoughts on this. So looking at the daily chart, and please bear in mind these are just my thoughts. So the level that T4 drew was that one, which is the rally base chart, but you can see the candles are really big. The candles, so this is a new level that was formed that I said we're sitting at right now. The first thing that catches my eye is that we are really approaching this level in a poor manner. And you have two levels down there. Let me just draw the second one. So it's really been approached in a very poor manner. It's accumulating orders as we go up. Not really a great prospect, but we are sitting in it. We expect prices to go a little bit deeper into the level just because of the size of it. So that will be the daily view for me as well. I would include that level as well. Noting in mind, as I said, the approach is not great. So taking a look at the 4 hour. So this is what the 4 hour looked like. Yes, we are. Something that I would point out to you on that 4 hour chart, if I just change this to a 4 hour, is that we had removed a stack of orders in here. A stack of orders in here had been removed. So this would be a 4 hour supply zone. Yeah. Even before this happened, you would have seen that. Um, so and you can see what's happening now. So remember the big lines, the big area is that daily area, and you're looking on the 4 hour now. Okay, so this is your big daily areas down in here as well. All right, so those are my thoughts on the Aussie US dollar in that conversation. Um, Isaac Pay, you were looking at the Euro USD trade that we took. So yeah, so I think something that um, you pointed out that on the daily chart of the Euro US dollar, prices are so bullish, and that would have put you off taking the trade. Yes, prices are bullish on the daily, but what we were looking at was a little level in here. It's really hard to see, but there's a little level of demand in there. It's a difficult level to see. Um, Granted, it is very difficult. It's what we call an embedded candle, and it's like a level on top of level. That's the level below it. So that's where prices were working their way off of. But even if you weren't using the daily, so one thing you that was omitted, I think, in your thoughts was the sequence that you were trading. Um, so if you were taking the daily 4 hour sequence, you were into daily supply. Yes, you're in an uptrend. Um, so if you are going to take a short, you must understand it's the riskier trade, and you would want to maybe use confirmation if you're not as aggressive. So going to the 4 hour, actually, let's use the same chart. Um, Going to the 4 hour, this is the action on the 4 hour at that daily level. So you can see prices have stalled out really. They've taken out that demand zone. and you see the pullback into the supply before. So a lot of stalling here. It may continue up. This may just be all a stall, but you would have taken your trades and be done with it for now. So going to the trade that was actually taken, here was a supply zone. So where we know where we are, here's a supply zone, right? But this was the trade, by the way. We had removed, before this trade was taken, we had removed um, demand right in here. Let me just get that. We had removed demand right in here. Okay, so going down to the 1 hour. So say you were using your 4 hour as your big picture. 4 hour also, as we can say, it's sideways. It's so where you're looking at it, you know you're in daily supply, but say you were using just the 4 hour. So 4 hour removed, a zone removed, the demand zone, you know that supply has been created up there. It's also broken momentum line, all sorts of reasons why that is potential supply. So let's go down to the 1 hour chart. So here was the trade that was taken, that 1 hour short right there. And the guys in the round table were the ones who actually pointed this out on Sunday night as we started the session, because the euro was gapping up. Oanda doesn't show a gap up, but I think on your brokers you probably do have a gap up. Euro was gapping up about 60 pips or something like that on Sunday. So we have that pullback right into supply. The short was taken, and I was pointing out to the guys that you had at least a 2-to-1 potential trade idea there, and it worked out very quickly actually, and it was done down in here. We've come back again into that level, and we've gone deeper in. So that was the process of getting that trade idea. Where we were on the daily, even where we were on a 4 hour, using the 4 hour as a big picture. With the removal of demand, we create supply, and we take the short. So I hope that helps you understand the thoughts behind why we took that trade. Hey Blaster. So yeah, so I think that's all I wanted to point out. I'm gonna take a quick look. Those are post-mortems, if you like, of two trades. Let's just take a quick look at some of the daily charts that we're looking at. As we said, we're hanging out in this area. There's nothing setting up right now on this one. Let's take a look at the US dollar. So these are old levels. I'm going to take them off. Let's just remove all of them, shall we? Oops. Let's just remove all of them. So on the daily chart, we've had this level in that prices have stalled at, and that's where we are still. We have some supply up in here. It's not the greatest, but I'll just include those two candles, and obviously we have a better level above there. So watching if the dollar gets a bounce. Obviously it's in a downtrend. If it gets a bounce, you may want to look for short-term opportunities in the majors, the Aussie US and the Euro US. See if you can get a quick trade off of those ones. Let's take a look at the Aussie US quickly. So we've talked about that one. We'll go to another one. Let's take a look at the pound US. Let's do the majors. I'm just going to take these out. These are old. So again, for the pound US, we have nothing on the daily chart up until we get to here. And we can see levels, tiny levels being formed as we go up. They're not really that quality, except the lower one, the ones lower down are better. But we can see the levels there still being formed with room above to continue this uptrend. So looking for buying opportunities in the pound US and the New Zealand US on the daily chart. Again, let's just take all of these out, remove everything, and we are grinding up in a very, very sustainable manner in this market. We are sitting into some, it's a big wick if you want, you can put it like that, but because the wick, you can see where the wick went into. The wick went into there. So this is the kind of analysis we do, guys, on the roundtable, week in, week out, where we talk about these things at much greater depth than can be included in a free video. So remember, the TIOF webinar is the when did we say it is? It's the 3rd of February. It's the 3rd of February at 8:30 p.m. UK time. So if anyone wants to join, you know where I am, storehouseanalytics@gmail.com. I wish you good trading. Take care, everybody. Bye for now.